one's the crypto asset? Bitcoin's the best crypto asset. Which one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best? 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 What's the second best? There is no second best.
Welcome into Discover Crypto. We have a live FOMC watch party today, folks. Jerome Powell is about to come out and cause some major problemms, but hopefully these could be problems to the upside for bears who are shorting this market right now. Bitcoin's been pumping up to this, but we're going to be watching Jerome Powell live very shortly. I got my man, Kelly Kellum, my co-host over here. How are you doing, Kelly? You got everything all primed up? I know we're ready to watch the calamity of Jerome here soon.
Dude, we got it all primed up. You know, I think we have it set up here, right here. Yeah, we got this primed up. As soon as we get the data, I just want you all to know we have the conference, the press conference, in about 30 minutes from now. But we're going to be watching right here on the Forex Factory website. We're going to be tracking this federal funds rate. The projection is 3.75, which means that would be a cut. So we want to see that or lower than that for the cut. We get that information in about 3 minutes, and I do expect to see a lot more of these whale games, this chop suey that we're seeing in this market. Look at that. Why does Binance have no volume? It's
been
bizarre.
Looking weird.
So,
You've been showing that for a few days.
Look at this. Wash out down, wash out up, come back to. I think we're going to be seeing a lot. But the question is, and everybody in the comment section right now, wherever you're watching on Rumble, on X, on YouTube, drop a comment in the live chat right now. Do you think not during the Fed meeting or the press conference, but do we end the day? Do we end the daily chart at about 8 p.m. tonight, 7 p.m. tonight? Are we up from here or down? Do we pump or do we dump from here following everything that happens with the Fed decision? Let me know in the live chat right now. Let's see who's going to be right.
Yeah, we got a couple predictions coming in. I am kind of assuming a little bit of a dump. I don't know. Like, I feel like we've dumped after rate cuts many times so far. Maybe this time is different, but someone's bringing up the Solana to Bitcoin chart. We looked at that on the 11:30 show this morning, the Ethereum to Bitcoin chart. A lot of these altcoin charts to Bitcoin look really good. So
man, everybody's saying dump, dude.
A lot of people are saying dump.
But
maybe
you know what?
Go up.
Remember what we talked about right before we went live? I saw this. A brand new account on Polymarket just bet $40,000 that the Fed won't lower interest rates. Why would that be important? Because that would be a $1.6 million payout. So do they have some inside knowledge, or are they just playing that big spread so they can get a lot of money? But again, this is coming up near momentarily, about a minute and a half. We're going to be getting back into that.
Make sure to follow me and Kelly. We are working hard for you guys every single day. Here's our Twitter at Druth Crypto, and then Kelly Kellum at Kelly Kellum with that fantastic, very serious, very proper look on your face there. Absolutely. Yeah. Like a blue steel.
Orange,
like that.
Orange steel.
Orange steel. I like that. Shout out to that. Now, and as we said, this is the most exciting thing for me in the longer term is a double green dot is showing on Bitcoin on the weekly market cipher chart. These are my signals to back up my spot buys. We're at that moment right now, and we are at the proving ground that basically we could drop down from here and this double green dot is completely null and void, or this is a rinse and repeat pattern that we've experienced time and time again over the last few years, where the fear hits all-time highs and then we pump up to new highs on the chart. So make sure if you are out there trading, get into our Discord, register with 2Bit, use your user ID to get into the Discord. The quant has been absolutely killing it. I just checked all the trades, multiple take profits hit. Absolutely amazing. And I'm excited to have the quant and Kelly and a couple other great traders. Like we had Crypto Crank on this morning, all working to find some sort of confluence, but also we find points where we don't quite agree. What you got, Kelly?
We need to get this music going, the drum roll right now, because what's the date what's it going to be? 7. Let's go. 5, 4. It's gonna be up, it's gonna be down.
Oh God. Is it coming? Oh God. This is intense.
Oh, we got the cut.
We got the cut. We
We
got
got
the cut.
That's
Love
funny.
it.
We're
Love
getting
it,
a little
love
bit of action too on the charts on that immediately. But remember these whipsaws that are trying to take your pocket money, guys.
Mm.
Don't be dumber here. Let it settle all the way through probably about 3:30. We're going to be seeing a lot of this chop.
Yeah. I don't have any active trades in right now because there's no way in heck that I could trade this market and cover all of the craziness going on right now. While we're watching, oh my God, we are really, where are we at? 91.2, 91,
93.2, 93.1. Ethereum's 30 over 3,400.
Okay. Not too bad. Not too bad at all. Well, that's quite beautiful. I like seeing that. Now the alts sector, again, I was highlighting how it's feeling decent. Monero's having a good day. Say's having a good day. Couple altcoins are trying to move just a little bit, and I did get a little bit degenerate. I bought some Pudgy yesterday. Maybe I'm in danger. But generally speaking, you know, the ones that are kind of flat aerodrome, I bought Pudgy on the kind of calm in the waters. Chainlink is on everyone's mind. Is it going to pump? When is it going to pump, if ever? Had a great discussion about that on the 11:30 with Crank as well, and Matthew Malik. He's the chaos I need in my life here. Now, the map of Bitcoin against Ethereum is telling the story here. So Ethereum is slightly up, Bitcoin slightly down, but trying to make a new move. Gosh, you're making me want to go check out the closer time frame of Bitcoin here real quick. Let's go in. Wow, look at the volatility here. So you're getting over 1% swing in a 1 minute time frame. That is Chop City there. If you guys are out there trading, please be careful in this environment. This is where this is a whipsaw. And you said it perfectly in the chat right before we went live, Kelly. When you trade into these types of environments, man, it's basically quite difficult to survive. So we have Jerome's going to be coming out to speak at 2:30 p.m. Eastern Standard Time. There's a couple things going on in the background. We have some political theater going on with the Fiat General himself, Treasury Secretary Scott Bessent, thanking the president for the "'tis the season to be jolly" moniker, unless you're a taxpayer in New York, Colorado, Illinois, or District of Columbia. I'm curious, where are you watching this show from right now? Drop your state, your country in the comments so I can know where everyone's coming from. But for millions of hardworking Americans, Kathy Hochul, Governor of Colorado Jared Polis, and then Governor Pritzker are the Grinches who stole Christmas, according to Bessent, courtesy of their Scrooge-like tendencies. American seniors, along with all workers who would benefit from the no tax on tips and no tax on overtime, will be robbed of their tax relief that they deserved. So it's more political theater, and honestly, quite a nice rendition here. Very glad that I left Colorado, honestly. So we got Argentina, Aruba, Baltimore, Thailand, Belgium. We got people all over the world watching this. This is awesome. Switzerland, Canada, Canada. It's Canadistan, Deucey. So Oklahoma for Huckle. Hucky. Now let's keep on rolling through the stories here. So this, I think, matters more than the 1 minute charts, more than the zoomed in time frame, is the U.S. Treasury yield. And this is a boring subject matter, but basically there is a potential and a way, a path being paved that I see. We were talking to TJ about it yesterday, where we could see a hybrid treasury bill that is a 90% treasury in US dollar and then a 10% Bitcoin allocation, more weighted in US debt, that could actually build a long-term outlook of stopping treasury yield from going parabolic, because if that happens, the mortgage industry seizes up, and then we enter into a nasty stagflation, which is something we do not want to see, just like what we saw in the 80s to 90s time frame, especially for gold. It had a blow off top. We covered that on the morning show, but things got very, very weird from there. And then JD Vance coming out. Sometimes I miss Gary Gensler at this point, but let me ask you this, Kelly. If Gary Gensler was still the SEC chair, do you think he would have any ability or interest in stopping OTC purchases of Bitcoin from Saylor and all these giant corporations like BlackRock? Like, would he even give a shit about that? Because that's my main gripe with this entire ecosystem and the setup we're in right now. Like, do you think he would try?
I don't know, because it works that way in a decent amount with traditional equities and commodities as well. I think Bitcoin and the crypto market specifically are a lot more sensitive to it because the market is so much smaller. So when you get somebody buying 1 billion, 2 billion, $700 million worth of that asset, bundled together, that doesn't have as much of an impact. It would have more of an impact on pushing price up.
Yeah.
But also
It's been aggravating to watch
Right.
those buys,
Yeah.
So I don't know. It's just something that makes me think. Nice comment. Your mom, I'm down 500K. Need that cut. You are banned in the UK. Hi from Scotland. Stockholm syndrome. Maybe. JD Vance came out, talked about Gary Gensler. I think this is yesterday, saying some pretty wild stuff. What you got?
I was just scouring. When I'm looking over to my left, I'm going through data that's because we just got the Fed stuff. And I just got this from Lynn Alden. Basically the print, the silent print, the stealth print begins. We're not money printing, mofo. If you are buying back like assets to put on your balance sheet with money that you're printing out of thin air to buy it, that is a freaking print. God dang it. And what we see, and this is from the Fed today, decisions regarding monetary policy implementation, increase the system open market account holdings of securities through purchases of treasury bills and, if needed, other treasury securities with remaining maturities of 3 years or less to maintain ample level of reserves, aka they are rolling. This is back into that sort of multifaceted, cloak and dagger quantitative easing by means of how they're stimulating the economy.
Okay. Well, I'm getting stimulated by these 1 minute charts. I'll tell you what, boy, because this thing is just being
I want
absolutely
you to
crazy.
stimulate me.
And that guy, yes, 50x is a problem in this environment. You are up by 1.6%. You're down by 1.6% in the matter of minutes there. So please, as I said before, be careful today. It's a wild one. This is also wild to hear from JD Vance talking about Gary Gensler. Let's have a listen.
Maybe the most important thing that we did for this community, we reject regulators and we fired Gary Gensler, and we're going to fire everybody like him.
You like that response? So I feel a little bit weird about basically because Wall Street buys assets OTC and then sells them open market, crushes retail. It's okay to do in crypto. That takes a little bit of the air out of my ethos of Bitcoin to a degree, Kelly, because we watch like MicroStrategy with their billions and billions of dollars of buys on the same day we're dumping by like 2 or 3%. You're like, how in the hell is this possible? But maybe you're right. Maybe it's just the way it is, and the hopeful romantic in me needs to die. But then the guy inside of me.
But we're getting that fire, just to further instill it. We're talking like what we just saw from Lynn Alden. This is what they're talking about. Another $40 billion, but over the next 30 days. So this isn't even waiting till January. It's surprising to me to see the price not just booming out of this in the immediate notion of this. I think everybody, again, we got the data, sure, but everybody's waiting on the funny thing is, Drew, everybody's waiting, not on the data we just got. They're waiting to hear the same cookie cutter regurgitated bullshit. Well, we're going to let the data come in and we're going to have to you're reading the same damn freaking speech that you have every time for the last year and a half. You mother. Yeah. There you go.
I have a lot of fun.
That's why we say wait till 3:34, let the market, chop people out, and then it's going to go into a direction.
Yeah, it's been choppy as all get out too. This is crazy watching this go down. I'm not touching trades today, man. And while this is all going on, the long-term, outlook of Bitcoin keeps me there, the growth of it. Doctors say in 10 years' time, humans will be able to live and work till the age of 120. And I see just absolutely hilarious comments under this. That Social Security isn't going to fund itself, right? Just stay on the rat wheel, stay working for that government cheese until the day you die. But they're going to extend your lifespan to 120 years old. Sounds super fun. What do you think about that? Would you keep working if that was the situation? I mean, what do you do?
You want to know the real answer to that? Here's how stupid our government is. Had they just taken Social Security money and invested it in a very safe sort of broad index like the S&P 500 or something like that over the lifespan from 1940 to now, they would have trillions of dollars in that account, even having paid out all the dividends that they would have needed to, the responsibilities to payouts to the people that needed those funds. The money would have expanded so ridiculously, but the government is so bad at managing money, $37+ trillion in debt. That they also don't know how to manage the money they currently have. Why not use somebody like Howard Lutnick or some of these other, amazing people in the capital markets to expand this money? I'm not saying go put it all on Dogcoin or Fartcoin or something like that, but safe bets. I mean, you look at it, you look at the S&P 500, you could have bought every market top before 20 and 30, 40% corrections. And over the last 100 years, you'd be up exponentially because these markets continue to go up because they capture the bullshit inflation we get from the nonstop money printing. So It's stupid that they didn't realize their own flywheel of capital expansion and utilize that to not be in this predicament in the first place. But as Elon Musk says, as much as it seems cool that you could live longer, 150, 200, 300, blah, 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 we actually need for the growth and the space of evolution and culture and people, you need the rotation of people. You need life, you need living, and you need death. Because, I mean, think about what we're seeing right now in our Congress and our House of Representatives. These people that are antiquated to even understand how to hold a damn smartphone, and they're legislating on AI. What the fuck are you talking about?
Yeah, I know. That is a very odd situation to be in. Now, I want to keep touching on a couple things because we're talking about the stock comparison here. ETH surpassed Bank of America now. It's the 34th largest asset by market cap. So slowly I see ETH climbing the ranks right behind Netflix and then Invesco. These are pretty big market caps that Ethereum is trying to knock on the door of. And the ETH to Bitcoin pair is starting to look pretty good. Now, something weird in altcoin land, Zcash showed up on Arkham Intelligence. So Arkham has now labeled more than half of the privacy chain Zcash as shielded and unshielded transactions. This accounts for $500 billion of volume tagged to known individuals and institutions. Sounds super private to me, right? This is on the privacy side though, Kelly, I did see a little bit of excitement on the Midnight token. I want to go pull up the Midnight token while we're waiting for Jay Powell to take the stage because I covered it. I was a hopeful romantic about Midnight yesterday, and I don't think it's on a bunch of exchanges yet, but it started to pump off of the floor that it fell down to, which is, again, I get it. I'm a hopeful romantic. Maybe I think too much good is going to happen in this world. But especially when I see things like that with Zcash, they've already marked half of the network. It doesn't sound very private to me, but we have this. So Night token fell all the way down to this floor, and I was kind of like, okay, I'm going to make myself feel better, inverted it, but this is the reality of the situation. It fell down to about 3.5 cents, and now it's pumped up to 6.6 cents. And at a kind of a midterm peak here, it hit 8.5 cents. So people that bought the bottom on that, other hopeful romantics like myself, they had some fun. And one of the bigger movers today is actually Monero. So I'm starting to see some excitement for these things. I wear Monero socks. I like Monero, hold some Monero, always been a fan of it. And this is one of the better charts out in altcoin land, right? You have a nice swooping higher low situation. Shout out to Monero. Like what you're doing there, even after the attack. They just kept trudging on. But, crypto is fun. Paul has highlighted this because if you click buttons in the right order, then your life becomes substantially better in every possible way. But if you click buttons in the wrong order, you become homeless and have to sell your car. So there's a slight difference on how things can end up going. That's why we must act wise. And I got some technical analysis on Chainlink I wanted to touch on. Here's Chris Barrett of Chainlink standing next to Howard Lutnick. And notice the angle of Lutnick leaning in to Chris Barrett of Chainlink, who is staunch and the midline straight up. I mean, this is the kind of technical analysis that I like. Some hillbilly TA for you. I think something good is going to be in the future for Chainlink. What do you make of this photo?
I mean, I think something good is in the future for Chainlink I mean, it's like saying, will we be using electricity in 5 years? It's an absolute yes. I mean, the amount of connections that Chainlink brings on board from the traditional asset world, also in the crypto asset world, and the cross-chain interoperability protocol, kind of tackling 17 birds with, one chain. It's not just an oracle any longer. It's the asset that's going to make all assets work together. So if you like RWAs, if you like tokenization, if you like crypto, if you like Web 2 to Web 3, if you like just Web 3, if you like just crypto, if you like the idea of the stock market being a little bit more, in the crypto space 24/7, all these things are affected by crypto's growth, by Chainlink's growth. So I think Chainlink is the one of three absolute blue chips, and that is Bitcoin, Ethereum, and Chainlink.
And it's hard to come up with a blue chip alt, especially in the difficulty that alts have had the last few years. On the liquidity map, it's a dead heat race. We have liquidity going down in a thick way to a 91.1. And then to the upside, the real magnet here to the upside is 93.4. So it's a split race on Binance right now.
Well, let's look at this, though.
Yeah.
That's in the immediate future. Check this out, though. What we've seen in the run up to $74,000. This is that pre-halving, 74,000, then the crash to 48, and then the launch to 109, then the crash to 74, and then the launch to 126, and then the crash back to $80,000. We've seen a very similar setup here where this has come back down and reset down before the move, reset down before the move. All of these also lending themselves around what's happening with the Fed rates as well. We just got a cut. We've also fully reset here. So is this going to be one of those things that lends us into this sort of setup where we get that upside that has been setting up for longer than we expected? So it's over because we're not patient. No, I think this is kind of more proof that we are setting up into that extended cycle. Because remember, those of you that say it has to be the halving cycle, the halving has reduced its impact by 93%. What do you mean, Kelly? It's still half. Yeah, from 50 Bitcoin per block to 3.125. That's a 93% reduction on what the impacts on supply are going to be. But at the same time, we're seeing this just in the articles we just read a second ago, 40 billion in the next 30 days. And it's going to be 40 billion monthly likely for the coming months, not to mention China, not to mention Europe, not to mention Japan. Global liquidity is exploding. I really do think that this is extended. And if we were going to look at this at something like we saw in previous cycles, it would be like this point in the cycle here before the biggest move, like this point in the cycle before the biggest move that also reset mid-cycle, much like this. Look at that mid-cycle, boom, after the halving, and then we got the biggest part of the move there. So there's a lot, but then we come back because we're all degens. We got to get back on to the what's it gonna do in the next 37 minutes.
I really am on my business about this bottom signal, and I have moved real aggressively on these weekly momentum waves to the downside, clipping a green dot already 3 times during this cycle, and it's paid out very handsomely. Now I'm at the point where it's like, okay, if we end the week and this double green dot remains, we have not had a double green dot since June of 2022 when Bitcoin was at $19,000. We have not had this same set of signals hit. And another thing about these momentum waves that I really want to emphasize here is that it's becoming a more normalized ebb and flow wavelength pattern. If you notice, the history of Bitcoin on the weekly chart on Market Cypher on the weekly is a very chaotic story. But as of recently, since ETFs and institutions became involved, this wavelength has normalized into an almost understandable, expectant washout flow, a staircase up and to the right with washouts down to previous highs. And that's exactly what we've experienced. Now, the crazy part about that double green dot is that we broke below this previous high, which is at 103. And now we are fighting for our right to party at this midpoint, and the electrical cost for Bitcoin all the while sitting right at about $74,000. This green box right here is my back up the truck moment at about $65,000, because if we do continue down to that zone, the last time we've had our bottom and I felt like just sending everything I had into Bitcoin, it was when we broke below the electrical cost by right about 18%. So it was about like 20% actually at Pico bottom. But when I saw the electrical cost at 19K and the price of Bitcoin on the general market at $16,000, it was a very clear, easy decision for me. So
no, I absolutely. I do want to shout out everybody that's tuned in. We appreciate you being here. We got Jerome Powell should be coming on here, and just a matter of a little bit. We got it queued up right here, 2:30 p.m. We're going to be listening along to what he says and try to figure out if this is what he's trying to do to the market. Is this what he's gonna? Is he gonna be just sprinkling a little bit of a bearishness, super hawkishness? Is a political sort of kerfuffle between him and Trump going to come in, or is he going to read the same damn press conference, or is it going to be something new? I think we all want to hear that.
I think you kind of predicted it with me in the hallway, Kelly. It's like they do the rate cut, but then he's got to have a slight degree of hawkishness. Like, hey, I'm still in charge here. You know what I mean? It's almost like they're admitting slight defeat statistically by cutting rates into inflationary increases, but he's got to act like he's still got a degree of control on the situation by changing some of the tone into a hawkish tone. Let me know in the chat. Like, do you think he's going to be hawkish or dovish on his speech today? Good morning, Chris. Fat from the BitLab crew. Shout out to you, man. Now, I got a couple other things we could touch on before this. We're talking about tokenization of Wall Street, Kelly. And one of my favorite out there, Jakey, he bought his first stock and he did it on Solana, right? So this is just kind of funny. I know that it's not a bunch of people on Solana are going to hammer into Wall Street options, but it was kind of fun to see Jakey messing around. I did diversify a little bit, and I'm picking up a little bit more nano nuclear energy. It's a stock I like, and let's actually check it out here. I feel like nuclear energy is going to be a good move over the next 10, 15 years. Yeah, it's not a bad chart. It's not a bad chart. I had a really big blow off top and then found support right at about $28. So I felt like taking a little dab at it. And also, Tensor Tau, can you check out Tensor Tau's price, Kelly? Because I keep missing the entry point, and we're coming up on the halving, which is coming up. It's going to reduce the emissions from 7,200 to 3,600 tokens per day. Now, this is the type of change in tokenomics that really, Tau's in its infancy in comparison to Bitcoin, and these halvings have quite a big effect on the price action here. What is the price coming in at, brother?
Yeah, this is what we were talking about yesterday. It's kind of been in the middle of this range here. We do have a nice sort of W formation, kind of a triple U. That's not a word, but triple bottom, rounded out a bit. But this is fighting like many altcoins. This isn't just Tau, like many altcoins, coming up to a horizontal level of resistance, also a descending level of resistance. That's also been support. And again, a lot, the majority of altcoins to look at have this sort of junction right here that this is all coming up into. I mean, we looked at Aerodrome yesterday. Look at this. It has that horizontal level coming down with this descending level. There's a lot. It just, everything feels like it's on the horizon, but I'm very bullish on BitTensor. In the near term, everybody's waiting on, seeing this round out, showing that the broader altcoin market is doing something. And then furthermore, everybody's watching the dominance. Yeah. And this has broken down, came up, retested, and it's looking like it wants to make that leg to the downside, but it needs to do that. This very well could push back up from here, but yeah. Oh, but we've also seen, I have it here somewhere, right here, bear flag. This is kind of bear flag I like to look at. This is the dollar. This is the dollar index on the 4 hour. If this does break down from here, from today, that would be another indication for risk to start coming back into the market. Gotcha.
Okay. Good things to be looking out for. Maybe I'll get my low $200 Tau entry, but the markets feel like they're trying to move back on up to the upside, especially in the alt sector. I had this post from BNB. Looks like Pudgy Penguins and Pudgy coming to BNB chain. And, I took a little bit of a stab, even like a 1% of portfolio play on Pudgy. Nothing crazy. But I think that this is kind of one of the more interesting memes, and I like having fun on chain. So we're getting to the very, very close to the live here, and I want to go check out the rest of the market and just see what the general vibe is for these alts. I saw someone open, they stopped paying attention to their alts, and AI16Z, or I think it was AI16Z that they were talking about. This is why you cannot stop paying attention if you hold alts. You have to be very, very involved because AI16Z does not look like this thing is coming back. This thing looks pretty much gone. There's a lot of charts that look like this too. And this is why I minimize the exposure of the size that I go into those alts with, so that if they do die, then my portfolio doesn't die. I lose 1%, right? It's just a mindset shift. It looks like fear and greed is trying to creep out of the extreme zone. And we are at a 30 on fear and greed right now. It's good to see. Yeah, that did. Gel AI. Let's check out the ETH to Solana chart while we're waiting here. Do you want to do that real quick? Because that's kind of one of the more exciting charts out there. I was looking at it earlier this morning on the basement.
ETH to Solana. Where's
my
chart?
ETH to Bitcoin or ETH to Solana, because both I like seeing these pairing charts right now quite a lot. Let's see here. Leave BTC and dollar Ponzi and gold. Gold is the only way. I understand people with that mindset. Gold ran from like $2,000 to $4,500, and that's a good move, like 120%. But gold holders have been waiting for quite a while for that move, so you have to take it into context on time frame. What do we see on the ETH to Solana chart?
This is ETH to Solana, but I'm more curious what Sol ETH. This is it's going to be the inverse of that, right?
Mm-hmm.
This does not look good for Sol to ETH, meaning it's not going to hold up as well as ETH or move as fast as ETH. I mean, it very well could. This looks like a head and shoulders, and it wants to fall in terms of how much it's valued against ETH. But I mean, Solana is one of those coins that the technicals show this could go down, but it's so bizarrely positioned with some major VC, major corporate, major institutional players and ETFs that this whole story could be nullified. So if this does drop a bit further, the area that I'd be really watching, let's go like this. I would be watching right in here. Why there? Because you see this bounce, you see this reject, this bounce, this rejection. So this would, I don't think this is why. I don't think that, like, if you do the measurement here, do I really think that Solana to ETH is going to go negative? No. This is why TA is an art form. It's going to give you a general idea about some probabilities, but it's not going to be exact. So this does tell me that there's weakness here. So it would make sense to me if this did break down a little bit further, spend some time, and then have your reversal or something like that. What was the other one that you're asking about?
Well, actually, I mean, I want to hop over to this because we have breaking news that came out of Kobayashi where they gave a summary of the Fed decision right before Jerome Powell goes live, because I know he's going to be coming up in about 2 minutes. So the Fed cut rates by 25 base points for the third rate cut of 2025. So we had 3 rate cuts in this year. This is the last one of the year. They did another 25 base points. Fed will consider extend in timing for additional adjustments. The Fed will begin purchasing US T-bills on December 12th, which is 2 days from now. And the Fed will buy $40 billion of T-bills in 30 days from now. So within the month here, FOMC members Schmid and Goldsby dissent in favor of no change. Man, they like that chaos action. Fed signals rate cuts may be done for now, and Federal Chair Jerome Powell may be halting rate cuts again. So
what you're saying is that we're going to see this today. We're going to see this guy, and then what we're going to see once he starts talking is something like this.
Yeah. We'll get dinged for copyright if I keep going, but this looks pretty accurate. This does look pretty accurate. Just don't jump out the window, okay? Let's not make it 100% accurate, folks. And for the love of God, stop losses are your friend, especially on days like today, or just putting enough risk on there that you're willing to lose it, right? You don't want to put your whole portfolio out, especially on a day like today, trying to make it all back from the year of aggravation if you didn't take profits at those local highs. I mean, and generally the printer has no other way but to go on Are the markets dumping? Let's check it out. Let's check it out right now.
I got it on my screen. They're just
Oh
sitting
yeah,
there,
let's pull it up. Let's pull it
same,
up. Let's see.
same range. They're just
Okay.
this is a 3-minute chart, so it's trying to chop people out until we get that. Oh, here we go. Here we go.
Go.
Let's watch how the price moves when he says good morning.
Mm-hmm.
Now, everybody, while he's talking, I want to see you all live commentating what he's really thinking. I want to see your commentary, his inner monologue of what he really like. Give us what he's really saying, not just the words he's reading on paper.
Right. There's so much I want to say when he's talking, but I don't want to talk over him.
And the
but...
best we'll put up on screen, so long as it's somewhat.
All right, here he comes.
Whoa.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand.
Pump our bags.
In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year.
What a great economy.
A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well.
He said softened.
In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter.
Keeps edging us.
Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 0.75 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026.
They look like ancient hieroglyphs.
And 3.1% at the end of 2027,
They do,
unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis.
Jesus.
Let me turn now to issues related to the implementation of monetary policy.
I do miss Isaac.
With a reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including
11K watching.
reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement or repo operations are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Oh, God. All right. Not bad so far. It wasn't too hawkish.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it is it's partly that consumer spending is held up. It's been
On credit, twit.
To another degree. It is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1 for this year growth and 2.3 for next year. You actually some of that is due to the shutdown. So you can take 0.2 out of 2026. And put it in 2025, so it would really be 1.9 and 2.
It's Trump's fault.
But overall, yes, for a few reasons, fiscal policy is going to be supportive, and as I mentioned, AI spending will continue. The consumer continues to spend, so it looks like the baseline would be solid growth next year.
Steve.
It's always Trump's fault. He's fucking Democrat.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here? And have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment in the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
We just want an alt season that gives us more profits than this type of vehicle.
You have a whole lot of a big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. Also, I think productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing, but that's certainly the implication.
What's next?
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the two official dissents against the cut, but there were also soft dissents from four others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I've mentioned here before, the situation is that our two goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks? And what does your forecast look like? And where do you, ultimately, where do you think the bigger risk is? And you know, it's very unusual to have persistent tension between the two parts of the mandate. And when you do, this is what you see. And I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views. And you know, we come together and we reach you know, a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, you know, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're gonna look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about in a very positive way, just given the complicated nature of the situation we're in economically, but is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read, but in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick does have a hard job. I mean, it's a tough scenario.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3 is a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years. And indeed, the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Trump's foaming. He's about to go live too. Trump is going. He's going to be going nuts.
Hi, Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think an overstatement in these numbers by about 60,000. So that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought.
It's approaching depression level, bro.
In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, And that goods inflation is entirely in sectors where there are tariffs. So that does build on the story. And so far, it's only a story that this is that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic, heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall, that was the judgment that we made, and that's the action we took.
And just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to pick up within the range, right? And it ticked up almost all the way to interest-on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20-25 billion per month. So that's a small part that's going on. It's also happening in the context of a temporary month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Appreciate the super chat, bro.
This is the last
Thanks,
post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussion of that. I'll give you a mulligan though.
No, thanks.
Giving him a
I
mulligan.
get 3 questions, but
No, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed. And I think going back a long ways, we haven't had that in our framework. Our framework, as you know, says that when that's the case, that we try to, take a balanced approach to the 2 things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to, and I think ultimately what it says is when they're broadly equally threatened, are equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say. And that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
They're about to see $40 trillion walk out the door if treasuries keep rising. Just so we're clear. This is stagflation.
With Fox Business, I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, there's the announcement of a tariff, and then there's, they start to take effect, and then it takes some months. Goods may have to be shipped from other, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all of that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, roughly. We haven't been able to predict this with any precision. No one is, but call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this, and after that, again, if there are no new tariffs that are being announced, that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant there. And the president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and on that, and you've got when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very that's one part of it is inflation compensation break evens, and they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. Break evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs.
I thought we were doing great.
The current rate of inflation, a lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal. And our policy is intended to do that, but also have a strong economy where real wages are going up. where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher. It's positive, significantly positive. So nominal wages are higher than inflation, for people to start feeling good about affordability.
Right before we working with AI.
And,
right?
So we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages, so that people are earning enough money and feeling economically healthy again.
Victoria. Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing most of the inflation overshoot.
What a lie.
We do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry about the labor market, because the labor market unemployment was very low. If you remember, when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks.
Oh, it didn't exist.
And I think we're doing the best we can for people. They also care about their jobs. They do care about affordability. And the best thing we can do there is both to support economic activity, but also, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
God, what a old-faced lie that was.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody. They have a survey, and there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month. So 40,000 jobs could be negative 20. And, that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's demand. Labor supply has also come down quite sharply. So, if you had a world where there's just no growth in workers, and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
When we're talking about Bitcoin, we've seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be, but for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low. If there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. It really haven't much, so it's a little bit curious.
Gig economy, you quit.
The question is, what are we going to see here? And we don't know, but it's it may be that in past technology, really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Thank you, Chair. And Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
the policy what?
On the committee?
Thank you.
Why is there such a division of views between the presidents and the board members?
It's not so stark as that. There's depth. The views are more varied in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how do you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine.
Come on, Bitcoin. Go to 94. Let's go 95.
Thank you, Chair. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy? And what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think, the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a, price stability and a strong labor market. And what we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low rate mortgages from the pandemic period, and they kept refinancing and got the really low. So it's made expensive for them to move. And, we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time. And so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem. And really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address, a secular housing shortage, a structural housing shortage.
Deportations.
Chris.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, we see higher inflation. As I mentioned, most of the inflation over target is from goods, and we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? That's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that the labor market gets tight or the economy gets tight, and you see just traditional inflation. I don't see that as particularly likely. But so I think, again, all across the committee, people see the picture pretty similarly, but see the risks quite differently. People do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
So inflation's fake, doesn't exist, nothing's gone up. Insurance, housing, reading.
So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had 5-6 years of 2% productivity growth. This is higher. This is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. The pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation.
Hey, I'm a little tired of Powell. Do we want to cut to Trump?
May, but I'm wondering if you
We do have Trump live. Do you have him primed on your computer?
I can pull him up
Like I
right. It's
say,
on the White House.
My thought is
yeah.
that
I don't know what he's saying.
I really want to.
I was listening to Bit. It was economic announcement.
To whoever
he's
replaced
competing
with the economy in really good shape. That's what I want to do. I want inflation to be under control, coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what. And it's I don't have time to think about the bigger things. I hope many years ahead to worry about that, but there's enough to do.
You're done. All right, let's check out Trump.
Given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity.
Said you wanted to switch.
All right, let's switch.
Is that just collateral damage or unintended?
We'll mute that. Come here.
Let's check it out. Trump might be reacting hot to this.
A lot of global competition, but you'd rather be playing our hand than any other hand in the world.
We have a good hand right now, don't we? Joe Biden secured just really much less than $1 trillion of new investments in 4 years.
He's going to say the same shit he always says. Stop being on repeat, dude. I like you, but
the amount in 10 months what they did in 4 years, and they would have gone negative. They were heading toward negative. In other words, not $1 trillion, but it could have been 3 or 4 or 5 trillion less because people were leaving. So it was a big turnaround in 10 months. The $18 trillion, it's a record. There's never been a country that's gotten anywhere near that. In the Middle East, when I left the Middle East, we brought back $3 trillion and lots of Boeing airplanes, like 300. And Boeing gave me the award for the greatest salesman in the history of Boeing, which was a nice little award. I have a little plaque. The greatest, I think I've sold 1,000 Boeing planes. Can you believe it? Now all they have to do is make them. Okay, they got to make them, but they will. But we have made historic trade deals with the United Kingdom, China, Indonesia, Vietnam, Japan, the EU, Malaysia, Cambodia, El Salvador, Argentina, Ecuador, Guatemala, Switzerland, Liechtenstein, Thailand, and South Korea, and many others.
Who knows the Animaniacs?
It's based on the November 5th election result, which was a massive victory. We won all 7 swing states, the popular vote. We won the Electoral College by a landslide.
okay, this is going to irritate me. He's not saying shit.
Counties.
It's the same damn thing he says every single time he talks. Do we care to listen to him?
Most accurate of all.
No, I'll hear it just to see what he's saying here. I haven't really gotten the gist of what he's doing here yet.
It's 525.
Well, if you want to take care of the pooch, though, I can cover it.
2,700 against 525. 525. That's why when you see the maps are all red, except for 2 little blue lines on the right and the left side of the map. They're probably changing too. Americans are great builders, and in the Trump administration, America is once again a country where innovators get a green light. You have the greatest innovators in the world at this table, and representing a lot of their friends who are competitors and friends. But we're really on a big move to get rid of red tape so they can run their businesses and not have to wait 10 years for an approval. In the old days, getting some of these approvals for plants that are already being built would have taken 10, 15, even 20 years prior to rejection. You get rejected. You'd work 20 years and then you'd.
He heard we were pumping. He had to go live and dump us.
And we're getting plants approved in a matter of weeks. The biggest plants ever built in a matter of weeks. For every new regulation, we're slashing more than 10 old regulations. So we're not allowing regulations unless they /10 old regulations. We did that in the first term, and we cut more regulation than any administration ever. In our first term, we have the all-time record. I think we're exceeding it here. In fact, now it's 1 in 24 is the number we're at. It's 1 in 10 you have to do, otherwise we're not letting you do it. But we're actually up to 1 in 24, so we get rid of 24 regulations for everyone. That's not a bad deal, right?
Slashing regulations, probably making way for his new deal.
Including we're allowing 100 in the great big beautiful deal. We're allowing 100% expensing for capital expenditures, including investments in factories and equipment and structure. So including even structure. So that if Michael goes out and builds a factory, you can take it against tax immediately, the whole thing. You don't have to wait 38 years, do it over a 38-year period. And I think that's what made the first tax cut, which we, by the way, got extended in this tax cut. So, and you add it up, it's the biggest tax cut in the history of our country. But I think that the expensing factor, and it's good for 10 years too. I think that's the, maybe was the reason that so much growth was, there were other reasons, but so much growth was gotten in the first term. So earlier this year, I said that the challenges of our time demand a new spirit of patriotism and national loyalty in Silicon Valley, smart people, and from the whole technology sector. And that patriotism is on huge display here in this room with some of the most brilliant people. And I'd now like to ask Secretary Howard Lutnick to say a few words, and OSTP Director Michael Kratsios also say a few words. And I look forward to hearing from Michael a little bit about this subject. Cristiano, welcome. And Arvind, you'll say something, and I appreciate it. And anybody else wants to say a couple of words, feel free.
I'll listen to Howard.
So why don't we start with Howard, please?
So the key to America's success is the amazing innovators that we have. I mean, we have invented everything from the light bulb, transistor, GPUs. We are on the edge of everything. And we need to keep being on the edge. And the people at this table and this industry is why America's great. We need to build here. You know, for too many years, we innovated and we let everyone else build our stuff. And we just can't do it anymore. So with President Trump coming and winning the election on November 5th, we changed that. And now we're going to build it here. You've done everything you can. And you've heard trillions and trillions of dollars of technology build coming home to America to protect and defend us and use our innovations here. You're driving interest rates lower, and you're going to continue to drive them lower. That makes it cheaper. It makes it more exciting to build here. You're blowing out the regulatory deep state so that people can build here and do it fast.
Going to take years.
It's because of our investment in energy that drive down the cost of energy for all Americans, including the people who are building here. Drive down the cost of energy. It's great for America. Put all of that together, and you're going to see the greatest growth the United States of America has ever seen. You're going to see north of 4% next year, and then it's going to go up from there to 5s and 6s. This president's going to drive the greatest GDP growth, led by the tech sector coming home and driving growth.
I'm the real orange man. Have you noticed?
To say just before going over to Michael, and this Michael, and then we'll have this Michael, all right? But one of the things I'd like to say is, in the old days, when you announced really good results in this country, the stock market went up. And that's the way it should be. And we're going back to that. Because otherwise you can never really attain true greatness. In other words, GDP at 4. Oh, 4 is so high. Let's raise interest rates and kill it.
I'm oranger than you, Donald.
When we announce great results, it doesn't mean we're going to raise interest rates and try and kill it. It means that instead of 4% GDP or 3%, which I said so wonderful, 3%, it should be able to be 20 or 25%. I don't know why it can't be. You shouldn't kill it. And so we hope that if this country announces great results, because you're going to see great results over the next couple of years, all these plants, and I'm not just talking about AI. We have the biggest number of auto plants planned.
They're going to print
We
$20
have
trillion.
$10 billion in plants built, various couple of locations, few locations in the country. A little while ago. They're all coming here. They're coming here because of tariffs, because they don't want to pay tariffs, but they're coming here because of the election and the mindset. But when we announce good results, the market should go up. Now it's when you announce good results, Michael, the market goes down because they say, oh, that means things are good. That means we're going to kill it by raising interest rates. I think it's really wrong. It should be the opposite of what it is now. It should be the way it used to be. We announce good results, the market should go up, and we should keep driving it up and have it keep going up and let it be much, much bigger, much, much better. And, growth doesn't mean inflation. They're always afraid that, oh, we have, and if there is inflation, that's okay, then we can slow it down. But we should be able to do a lot better than 3 and 4. We're scheduled to be at 4%, which is pretty amazing because we have a deadhead Fed hair. I mean, this guy, the head of the Federal Reserve is a stiff. And, you fight that. It's amazing. We fight that, and yet interest rates are going down, except with him, not too much. He did a rather small number that could have been doubled, at least doubled. And that's the other thing. I think the rates in the United States are always the lowest in the world because without us, there is no world. Without this economy, there's no world. You could go to some of these wonderful countries that you think are so great. Well, one of the reasons they're great is because we allowed them to get rich off of us, didn't charge them anything. You look at some of the deals. I don't want to use Switzerland as an example, but Switzerland paid almost nothing in terms of a tariff or a tax or whatever you want to call it, license. They paid nothing, and they're paying now. They're paying a fair amount. I had them at 39%, but I decided to be nice. I was nice, and I think they like us a little bit better. But the money you're talking about is enormous. Our country is a very rich country, but if we do well, the market should go up, and the value of our country should go up. And if we do poorly, the market then should go down. It shouldn't be the opposite. And if we go up, we should encourage it to go up more. And those numbers, when you say, 3% of GDP or 4% of GDP, they should be much higher. So, I wanted to say it. I do say it. I believe it. And we have to get a mindset that when a country is doing well, you don't want to kill the growth. That's what they're doing. They kill the growth. I don't know if you guys even agree with that. They kill the growth because they're so afraid of inflation. But you can have tremendous growth without inflation. Everything goes up with the growth, but that's not inflation. So I think we can do much better than traditional numbers. And you see that. You see that with what we're doing. We're leading in everything. And now, and remember this, as far as prices are concerned, and they talk about affordability, I inherited the worst inflation in the history of our country. They say it was 48 years, but I say it was the history. What difference? It's 48 years, they were telling me. They said I was being inaccurate because I said the history. I think 48 years is a long time, but it's actually, I disagree. I think it's the history. So in the Biden administration, I inherited the worst inflation in the history of our country, or 48 years. And prices were very, very high. I brought the prices down. We had yesterday 3 states where oil was at $1.99 a gallon. How about that?
Oil, huh?
And
okay.
You
mean gas?
It was $4, $4.50. In California, it was like $7 because that's a badly run state. But the price for oil and gas and everything else, the price of gasoline was $4.50, $5. And we just hit $1, and now we broke $2. I was looking forward to that. Couple of states, 3 states. And I will say that when that happens, oil and gas and energy is so big, it's so big a category, you don't even know what number 2 is. There is no number 2. And when you have prices coming down for energy like that, you've killed inflation and you're lowering prices. So I inherited very simply the highest prices in history, and I'm bringing them down really fast, led by energy. And when energy comes down, everything else comes down. But I've only been here a short while. And we gave them a beautiful, beautiful thing and they destroyed it. They would have destroyed our country had they been allowed to stay. If we didn't win this election, if we had Kamala, who's the same as Joe, low IQ people, but if we had Kamala, as you would have a country that would be right now in ruins. I believe that 100%. Things would be in a state like nobody's ever seen before, worse than anything you've ever imagined, worse than 1929, in my opinion.
It did lower the cost of all coins.
Then we have the hottest country in the world, and we're going to keep it that way. But just to finish, we inherited high prices. We're bringing them down very rapidly, and we're bringing them down to very, very good levels. They'll soon be down at very good levels. Michael, please go ahead.
Absolutely. As everyone in this room probably knows very well, leadership in science and technology has been foundational to our economic and national security for decades. And because of the policies that you have championed and the private sector partnerships that you have made, America currently is leading the world in S&T, and it's benefiting all Americans every day. The one thing that I want to remind this group of, and many of you know, the president has been arguing for American leadership in AI well before ChatGPT was even invented. The president signed an executive order on artificial intelligence leadership in 2019, which set the stage for the revolution that we're seeing today. In the past year, we've built on that. We signed out the AI action plan in July of this year, which the president launched here in Washington, along with 3 EOs. And I know a lot of that effort is around creating a regulatory environment to allow for companies like yours to thrive and for the applications that you build to have the biggest impact on Americans every day. So thank you for everything that you do. And I know we're going to keep working together to make sure that America is the home for the next great technological discoveries.
All right, thank you, Michael. And Michael?
Thank you, sir. Well, look, we greatly appreciate the focus the administration has on lowering energy costs. And energy is the substrate of manufacturing at the industrial level and really an incredibly important input to the economy. We can't be competitive without a super low cost energy industry. And had a great meeting earlier today with Secretary Wright, and really appreciate all the work that he's been doing. This is incredibly important when it comes to AI, because it does consume a great deal of power. All the semiconductor manufacturing consumes a great deal of power.
Notice they're not acknowledging the amount of money they're going to have to print to expand this AI.
How we can take all this great AI technology, the AI stack of the innovative companies here in the United States, and sell that around the world. And I'd like to ask Arvind to speak a little bit more about this. Arvind?
Thank you. So, Mr. President, first, we really would like to thank you for everything you're doing for economic growth, as you said. I completely agree with you. Economic growth then drives a lot of other benefits to everything else. We also want to thank you for all the work you're doing on deregulation and making things easier for business to participate in that growth. Michael spoke of the AI stack. It's incredibly important that under the action plans that you have laid out and Michael Kratzer just spoke of, we really help promote the AI stack, which is not semiconductors only. Those are incredibly important, but it's semiconductors, it's software, it's the systems which many of us here build, and it is the software applications on top. The ability to take those to all our friends in countries, so all the friendly countries, is going to be very, very important. And we wish to work with your government to make sure that we can do that, because otherwise we're afraid that competing countries are going to be able to get that stack. So we would say that.
Anything that you're looking at that we can help you with so that you create a bigger and better IBM and hire a lot more people? Anything you need?
A few countries, we will speak to members of your administration to make sure that those can go and that barriers get lowered for being able to do it quickly. We agree guardrails are necessary, but lower barriers would be very, very helpful.
You mean tariffs?
No,
Because are these country are they tariffing you any, making your life difficult? Are they
Oh, he's looking for a fight.
to make your life difficult?
It's the ability to take certain systems which have semiconductors inside them into these countries. So right now, because we have controls on where all the semiconductors can go, then the entire system is restricted. That's what we want to do. The same as
How many countries do that?
Probably a half dozen. So
I can tell you the countries already. I know.
Yes.
I know every country very well.
And
We have ways of combating that quickly. So you'll let me know.
And the last part I'd like to say is I'd also like to thank you for all that you're doing to help modernize government itself, because we think that that's incredibly important. You made a number of announcements, but a couple that I'd just like to point out. We worked with Commissioner Frank Bisignano to help make Social Security better. So I would like to thank you for your help on that. And we'll work with him on making IRS.
He's done a fantastic job.
He is. Frank's great.
Oh my God, this chat.
That's
So good.
Actually left a tremendous career where his salary, I think, was 100 times greater than it is now. And he was at JP Morgan Chase, and he's doing he did a great job at Social Security, quickly.
And we hope to help him replicate that now at the IRS also.
Very good. Thank you very much. Good job.
Thank you.
Cristiano, please.
Yes, just a few points.
Ronaldo.
Well, Mr. President, thank you for your vision. Thank you for understanding the importance of the American private sector in industry, I think, in the growth of the economy. I want to just build on some of the things that were said by my colleagues. I think we have built probably one of the most advanced technologies in the world. And part of it is because I think the commitment to innovation that we have in the country, but also the fact that it has been American technology for the world. So I think we have an incredible opportunity. When I think about what Michael said about exporting AI, I had conversation with Secretary Howard. Now that the trade deal's been made, is an opportunity to really build on those trade deals and export, I think, American technology. And also, as we think about the technology, it's an important vector to drive the reindustrialization, I think, of the country with technology. So we're incredibly excited about that. I think it's a big opportunity. I think it's the next wave of growth that we can build on those trade agreements. And I think it resonates what also Arvin said about the importance of the American technology stack. And then we're just going to finish with 2 points. There are 2 exciting things happening in the world of technology coming right now. One is as AI become the new form of computing, AI is going not only to the data center, but to everything, to cars, to PCs. And we see now the ability to run models that you can only run AI in the data center. You can run that on a microcomputer, on a computer for Enrique, on a server, with small server on premise. So I think we're going to see the proliferation of AI. The other one is 6G. We had made a commitment working with your administration, working with FCC. We're going to accelerate 6G. We're working to launch first in the world in the LA Olympics. And I think that's another opportunity for America to lead in the next wireless evolution. So thank you. Thank you for the opportunity. Thank you for the partnership. And we're going to be hard at work, I think, driving that agenda.
So we're into 6G now. I just finished 5G. I was a leader on 5G, getting that done. And now they're up to 6.
Let's do it again.
What does that do?
5 to 6G, like a what?
Deeper
2
views
years
of somebody's skin. See how perfect it is. I like the cameras the old days. So they just had a nice feature. Now they cover every little. Let's see, Michael, you're in good shape. You're not gonna, but I tell you, it's the 6 is coming, huh?
It's coming.
Does it ever end? And what happens? You'll be into 7, right? Before 6 gets old, you'll be into 7. Anybody have anything else to say? Anybody?
No more glazing?
We want to thank you as well for the openness of your organization. And
Where's your
Can you
visa?
just make a 6?
We always
7
find people that
reference?
wants to hear what we need and is willing to design programs that will support that. So thank you for.
Well, we're here to, we want you to just dominate the whole world in terms of what you do. It's a very important world. And you're doing that. We're making it easy for you. And that means you're going to do it faster. It's more jobs. A lot of good things happen. Right? Go ahead, please.
Mr. President, you may not recall, but in your first term, you actually sponsored the Department of Energy to build the largest systems ever built And thanks to your sponsorship, the Department of Energy owns the 3 top supercomputers in the world.
Yep.
And we build it with them. And these are systems that can do quintillion operations per second. And that means we can solve
I know. I
a lot
remember.
of
We made that possible. It's worked out very well. Good.
solve problems. So I know we're going to build the next generation again.
Good. Sounds good to me. Any questions, please?
Mr. President.
Christ.
Explain a little more about this Venezuelan oil tanker and share a little more information.
Well, I'll let the people do it, but you see the result, and I guess they probably have released the pictures by now or pretty soon. You'll discuss that with the appropriate people later on, but no, it was seized for a very good reason.
Cuba.
Sir, there's a new proposal from DHS that would see tourists from a lot of countries have to hand over 5 years of social media history to get a tourist visa. Are you concerned at all that if that's implemented, there would be a decline in tourism next year? And then what sort of material do you think is?
We're doing so well. We just want people to come over here and safe. We want safety. We want security. We want to make sure we're not letting the wrong people come into our country. We're getting rid of a lot of bad ones from jails, from mental institutions, drug dealers. We're getting a lot of bad people, murderers. 11,888 murderers. Half of them, almost exactly half of them, committed more than one murder. We're getting rid of them. In some cases, we don't even want to get them out. We put them in jail because we're afraid they're going to come back into our country. We're not going to let them back in. So we've taken a very tough stand. And you see where we've been, like Washington, D.C. now, people walk down the streets. They go into restaurants at night. It's beautiful. It's like this beautiful thing to see because till I got here, this was a very, very bad place. We had a terrible thing happen 2 weeks ago with terrorism with regard to 2 National Guards people that are so phenomenal. One is no longer with us. And one, amazingly, we weren't looking with great hope on that, that Andrew. And today he got out of bed, actually, stood up, didn't say anything. It's a little early, but the chances of Andrew, other than his mother who said, nope, he's going to be okay. His mother was the most positive person. And could be that she'll be right. It's pretty amazing. Made progress. It was, both of them were so badly hurt. We never thought that one could survive. So it looks like Andrew's doing pretty well.
Bitcoin wants to try to go up again.
The Nobel Prize, dedicated the prize to you, the Nobel Peace Prize. And she left Venezuela at a great risk to make it to the ceremony. There is a risk she could be arrested, actually. What would happen if she's arrested? What message do you send, or would you send to Nicolas Maduro?
Well, arrested by who? The Nobel Prize Committee? That's probably the ones that would arrest. I don't know anything about it. She was very gracious. She said I should have gotten the Nobel Prize, and I don't. I'm doing this to save lives. I'm not doing it for any other reason. But no, I don't like if she would be arrested. No, I wouldn't be happy with that.
Mr. President, Senate Republicans currently have a healthcare proposal that would take away, let those ACA subsidies expire, and then put about $1,000 in people's HSAs. Do you think that is enough money, and how do you ensure that people who will see those tax subsidies expire won't see their healthcare costs skyrocket?
Well, the Unaffordable Care Act, which is Obamacare, they call it now the unaffordable because it's unaffordable. It used to be called the affordable, but it was never affordable. It was always bad. It was basically designed for the benefit of insurance companies. And what we're doing is we want all of the billions and billions of dollars that went to insurance companies to go directly to the people, and they can buy their own health care. And people love it. I don't know if the Democrats are going to approve it because they want the insurance companies to make money. It was a scam. Obamacare was a scam.
Really, private health is a scam.
I mean, the Republicans, I can tell you, want the money to go to the people. And we're winning that battle. The Democrats are having a hard time with it because they're in the pocket of the insurance companies. Yes, please.
You spoke to some European leaders today, I think, sir, about Ukraine.
I did.
Could you tell us about that? And is there a new revised peace plan that Ukraine has presented?
The leaders of France, we spoke to, Germany, and UK, all very good leaders, very good friends of mine. And we discussed Ukraine in pretty strong words. And we'll see what happens. I mean, we're waiting to hear answers before we progress. You know, we're not spending any money in Ukraine. We're selling basically
NATO.
missiles and everything else to NATO. And NATO's paying us, and then they distribute it to who they want. I guess they're mostly distributing to Ukraine, but
We have
we're
a
not
middleman.
spending money. But you know, we're spending a lot of time and a lot of effort, because last month 27,000 soldiers were killed. Both, think of it, 27,000. That's if you take a football game and take half the stadium, that's 27,000. So 27,000 soldiers were killed. Russian and Ukrainian soldiers were killed. And I want to see that stop. We'll find out. Look, there are a lot of things happening right now. A lot of people say it's closer than it's ever been. It's a war that would have never started. If I were president, would have never started. It's a war that should never have started. But we'll have it figured out, I think, within a pretty short.
You say very strong.
I doubt that.
Well, I think we had some little disputes about people, and we're going to see how it turns out. And we said before we go to a meeting, we want to know some things. You know, they would like us to go to a meeting over the weekend in Europe, and we'll make a determination depending on what they come back with. We don't want to be wasting time. Sometimes you have to let people fight it out, and sometimes you don't. But the problem with letting people fight it out is you're losing thousands of people a week. It's ridiculous. The whole thing is ridiculous.
Mr. President, two questions. One, the oil tanker. Who owns that oil tanker?
You'll get that information later.
Okay, and have you spoken to Maduro since your last conversation?
No,
Or
I
has it
haven't.
only been one conversation?
No.
And when you say that the European leaders want to have a meeting over the weekend, are you talking about with Zelensky or with them?
With Zelensky and us.
And you said in an interview yesterday that you think it's time for Zelensky to start accepting things. What things are you talking about?
I think he has to be realistic, and I do wonder about, you know, how long is it going to be till they have an election? You know, it's a democracy. It's a long time. They haven't had an election in a long time. It's losing a lot of people.
We don't.
And, it's possible the people, you know, if you look at the polls, I will say 82%, there was a poll that came out, 82% of the people are demanding a settlement be made, Ukrainian people. They want to see a settlement be made. I understand that. They're losing thousands and thousands of people a week. They want to see it ended. And I do say, you know, at what point, when do they have an election in Ukraine? That's not casting dispersions on anybody, but they do have a massive corruption situation going on there. And they do say
Back
that.
to 92K.
When
Son of
are
a gun.
they asking this question? When do they have an election? Are they going to have an election? Or are they going to just keep it going like this? So I think it's time to get that war settled. And I think it's a war that can be settled. But it takes two to tango.
Mr. President, Warner about the new owners of Warner Brothers Discovery to make changes at CNN, big changes, and have you spoken to Jared about it? What are you doing with him, or are you just sort of walled him off a little bit?
So what do you want to know?
What changes do you want to see at CNN under new
Well,
ownership?
I'm not involved in that. I will be probably involved, maybe involved in the decision. It depends.
I misspelled Santa. I'm sorry.
Good companies bidding on it. I think the people that have run CNN for the last long period of time are a disgrace. I think it's imperative that CNN be sold, because you certainly wouldn't want to put people, just leave those people with some money, good money, and CNN, so that, you know, they can spend even more money spreading poison, because it's lies. It's a disgrace. So I wouldn't want to see the same company end up with CNN, the same company with money, because right now they don't have too much money, but they have value, I guess, based on the bids. So you've got value. But I think CNN should be sold, because I think the people that are running CNN right now are either corrupt or incompetent.
And that'll be a factor in decision making, because you know we've got some.
Well, in my mind, but you know, I can be talked out of that by some very talented people that we have, antitrust people. But I just think that the people that have run CNN into the ground, by the way, nobody watches, very few people watch. I don't think they should be entrusted with running CNN any longer. So I think any deal should be guaranteed and certain that CNN is part of it. or sold separately. But I don't think the people that are running that company right now and running CNN, which is a very dishonest group of people, I don't think that should be allowed to continue. I think CNN should be sold along with everything else.
Sir, you spoke about affordability
Nationalized.
in your remarks and yesterday in Pennsylvania. How much more can we expect to see you on the road kind of delivering that message? And are you worried at all about the Democrats winning?
Who would have pulled back?
I don't worry about it. It's like statistically, it's amazing when you win the presidency, even if you win by a landslide like we did, and even if you do a good job. And some people say we've done the best opening 10 months in history, in the history of the presidency. I think we have. Who's done better? We ended 8 wars. We have the strongest economy. We have $18 trillion coming in, which is more than any country had times, I think, 5 or 6. 18 trillion is a lot even in your standard, right?
Yes, sir.
Even for that guy, 18 trillion is big numbers. But we have $18 trillion coming in. Pretty amazing, right? I think Qualcomm would be very impressed if they had even a little piece of that. So we've done a great job. But for whatever reason, and nobody's been able to give me an answer, when you win the presidency, you seem to lose the midterms, even if you win the presidency by a lot and you do a great job as president. Some presidents have done good and they've lost. I think it's like 2 times in the last many, many years it's been won. I don't know why. It doesn't make sense. Usually I can figure things out, but I don't know why, but that seems to be. But other than that, we should win because we're doing great. The economy is roaring. I think the economy is only going to go, better with all this money pouring in. We have factories being built, and forget about AI. We have AI more than anybody. We're leading AI by a lot, but we have many car companies coming in from Canada, from Mexico. They're closing up. They're coming in from Mexico. They're coming in from Canada, from Japan, from Europe, all over Europe, Germany, all over Europe. We're doing great. But for whatever reason, it doesn't matter how well they're doing, good and bad. The bad you understand, but even when a president is doing well, they seem to not do well in the midterms. So we're going to try and change it. There should be no reason for it. If anybody at the table can figure out, Bruce, a nice psychological reason, but so I want to win, and winning the midterms is important. People want us to win the midterms, and I think we have great spirit. We should win the midterms, yeah.
Under Joe Biden's administration, during COVID,
His bunny Donald.
the safety standard on abortion drugs. Now I'm hearing from a lot of pro-life
Lord.
just because yesterday Bloomberg reported that your FDA is slow walking a review of the abortion drugs that.
You need to hire better boom guys.
Yeah,
How soon do you want to see that?
I'll find out. I'll ask them.
Do you want to see?
Yeah, the guy needs to know.
anything.
She's talking. Okay, let me
I'll
put
find
the
out.
fucking mic near her. And then when Trump talks, you put the mic near it's rocket
Yeah, I
science.
think I'll have to make a phone call. I was going to say that the Thailand and Cambodia, one of the 8 that I settled, they've been fighting for a long time. They've been fighting for a very long time, many, many, many decades. But I got along great with both. I found they were 2 great leaders, 2 great people, and I settled it once. I think I can do it pretty quickly. I think we're scheduling a phone call tomorrow
Mr. President,
with Thailand.
on the Fed chair.
With Thailand, if just to answer Steve, with Thailand and Cambodia, I think I can get them to stop fighting. Who else can do that? Think of it. Settled 8 wars. Every once in a while, one will flame up again, and I have to put out that little flame. I have to put it out, but we're going to put it out again. So I think I'm scheduled to speak to them tomorrow and see if I can. It was unfortunate what happened. I know exactly what happened. It got it started a little bit, but we'll see if we can put it out.
A Bitcoin fake out of the century today. Sad. Very sad.
Well, you have to follow the tanker. You're a good newsman. Just follow the tanker.
Look at that.
Do you know where it was going? Was it going
Follow
to
it. Get a helicopter and follow the tanker.
Is it true it's going to?
But we're
Cuba?
I assume we're gonna keep the.
Mr. President, on Fed chair, Kevin Hash said you were going to announce your decision within the next 2 weeks. Is that correct?
Maybe.
Are you doing your interviews with finalists today?
Well, I'm meeting with Kevin Warsh today, so I'm meeting with him. And I sort of have a very good idea what I'm looking for.
Yeah,
Again, I'm looking for somebody that will be honest with interest rates. That's all. I just want honesty. Our rate should be much lower. Our rate should be the lowest rates in the world. Because all these countries that you see, you know, with low rates, many of them are low because of us, because they suck so much money out of us. But that's not happening anymore. We should have the lowest rates in the world. And without us, none of them really exist as an economy. I mean, I can show you these really prime, really wonderful countries. They've had nothing but success. It's because they took so much out of the United States. I mean, it's one of those little problems. I want to see that when we do well, we're rewarded for doing well, not the way it's been for the last pretty long period of time.
Are you asking finalists to pledge to lower rates? Are you asking these finalists to pledge to lower rates? If they
No,
become the chair?
no. I'll be asking questions and I'll be able to figure it out.
Mr. President, we have 3 countries sending drugs to the US, Mexico, Venezuela, and Colombia. And you talked to the president of Mexico, you already talked to Nicolas Maduro. Have you considered talking to the president of Colombia, whom you call a drug dealer?
Thought too much about him. He's been fairly hostile to the United States. And I haven't given him a lot of thought. He's going to have himself some big problems if he doesn't wise up. Colombia is producing a lot of drugs. They have cocaine factories that they make cocaine, as you know, and they sell it right into the United States. So he better wise up, or he'll be next. He'll be next too. And I hope he's listening. He's going to be next. Yes.
Mr. President.
We don't like people when they kill people, and they sell drugs. They kill them in the United States, and Colombia is a major manufacturer of drugs, meaning cocaine in particular.
Oh, damn.
As you know.
Thank you, Mr. President.
Thank you.
Oh, he's about to drop some bombs.
In recent weeks, days have
He's about to send them.
Speaker Mike Johnson. I wanted to ask you if you're still confident in the speaker to keep his conference together ahead of the midterms, and how often are you speaking about him?
I think Mike Johnson is great. You know, he's had a majority of 2, 3, 4, then back to 2. We actually had 1. So we were 1 heart attack away from disaster. So everybody prayed for everybody's health. I think Mike Johnson's been a fantastic speaker. I mean, a very hard job because, you know, when you have a small majority, and we got the biggest bill in the history of our country approved, the great big beautiful bill. I call it the great big beautiful bill. There are different names for it, but to me, it's a great big beautiful bill because it gives the biggest tax cuts in history, the biggest regulation cuts in history. No tax on tips, no tax on Social Security, no tax on overtime. I think Mike Johnson's been a great speaker. I think few people could have done that job.
Do you want to see another big package move through Capitol Hill the next year, or?
Well, we don't need it because we got everything. You know, this was supposed to be 17 bills. I think it was my idea, but, you know, with the concurrence of people that have done this a long time. And I said, why don't we make it 1 bill? Because it's very hard to get things approved by the Democrats. And it worked out because there was something good for everybody. If we would have done 17 bills, we wouldn't have gotten 1/3 of them approved. It was something great for everybody in the one, you know, the great big beautiful bill.
How am I so much tanner than Trump? I don't have any tanning oil.
Yeah, big crowd.
It seemed like
Incredible.
Rally Trump was in prime condition last night. You enjoyed it. Can you just give me your thoughts on that? Then I do have a question on the gold card.
Last night was amazing in Pennsylvania. We had a tremendous crowd. It was like freezing. And the people, the thousands of people on the sidewalk trying to get in on the streets. It was an amazing evening, actually. And I think people really enjoyed it. I enjoyed it. You could tell that.
I can tell that you enjoyed it.
I enjoyed it. I really did. Well, you know, it's easy to enjoy when you do a good job. And, you know, when you can talk about things in a very positive way. It's hard not to say it. We have potentially the greatest economic boom in the history of the world. It's being built right now. And when it opens, there will be nothing ever in history like what's happening in our country. And, you know, Washington, D.C. is safe, and Memphis is now, look at Memphis, crime is down 60% in Memphis. We just got there 3 weeks ago.
Send them to Atlanta.
And,
come on down.
We're going to have New Orleans. New Orleans was we just sent a group of people there, and crime is down 28% in about 3 days. No, we do a good job. You know,
And these are central casting people. These people they're very tough people if they have to be. They're very good. They're great patriots, but they are the toughest, and they don't take any nonsense. And every place we go, we knock down crime. Too bad that we're not invited more into Chicago, because we could save Chicago very quickly. But even that, we're doing it on a minimal basis until, at some point we'll just go in and do what we have to do if the governor doesn't wise up.
I got to ask you a quick question. So would you want Trump to send the National Guard into your local area to clean up crime? Like, do you live in a high crime area? I am in Atlanta. There's a lot of crime here. There's a lot of people to deport. There's a lot of things to be done here. So it's just on my mind. I wanted to ask you guys real quick. Let's keep going.
They got a bad governor, they have a bad mayor. I would say they're both incompetent, but it's hard to believe that people don't want to stop crime. We could stop the crime in Chicago in about 2 weeks. Go ahead.
My question is on the gold card. I apologize if I missed the answer to this. Is there a limit to how many gold cards these companies can buy?
Howard?
So the program is part of the already approved visas. So we're just going to have great people come into this country. The average green card holder earned less than the average American. So they were more likely to be on the dole and be on our assistance programs than average Americans. And the idea is from President Trump, he wants to raise it, bring in the best people into America. So same visas, but now just full of the best people.
Basically, it's a green card, but much better, much more powerful.
Dude, this is not
much
great.
stronger path. And a path is a big deal. Have to be great people, but much stronger path. And it also, in addition to that, helps companies, because not only for companies, but if IBM gets somebody number one in his class at the Wharton School of Finance, and you're dying to get the person, but you can't guarantee the person stays in the country, because oftentimes they'll say, I'm sorry, sir, you got to get out of here. You have 24 hours, right? And you say, where's my employee? Now IBM can buy a card, and that employee can be there for essentially a very long period of time.
2% drop since you started talking.
It's so needed for the companies. It's needed for others, but really it's basically a much better form of a green card. And you can't get green cards. They are impossible to get. This is much better than a green card. Yeah.
Yeah, so did you tell Bruce Clayton not to run for governor, or that she should think about not running for governor?
I haven't spoken to, first of all, he's a friend, she's a friend. These are two great people running. In a way, I hate to see them running against each other. I hope they're not going to be damaging each other. But Alicia's fantastic, and Bruce they're two fantastic people. And
I hate when I'm right about
I
pessimism.
always hate it when two very good friends of mine are running. And I hope there's not a lot of damage done. Sometimes it works the other way. The victor ends up being much stronger because of it. A lot of times that happens in politics.
You think it's in a couple of months to actually see who performs?
Well, I think in New York, we have a convention toward the end of February, and I think you'll know pretty much at the end of February what's going to happen. And I'll probably have to, do what I want to do. But I hope that he's running now, as you know, and she's running. We have two very talented people. Either one should win against the Democrats.
Mr. President, your legacy story lately focuses on one of your cabinet members predicting that you're going to fire this one or you're going to get rid of that one. Of all your cabinet members, who would you perceive as the most under attack?
Well, I think my cabinet is fantastic. I read these same stories that I'm unhappy with this one or that one, and I'm not. I think the cabinet's done a great job. I read a story that I was unhappy with Pete because he was attacking drug dealers. I said, that's not exactly right. I would say very much the opposite. Pete Hegseth has been phenomenal. I read a story recently. I'm unhappy with Christie. I'm so happy with it. I mean, we have a closed border. We have a border that's the best border in the history of our country. Why would I be unhappy? She's fantastic, actually. No, we have a fantastic cabinet. Really fantastic cabinet. I mean, Lutnick, I'll have to think about. No,
Can't have everything.
Can't have everything. He's doing great. Well, Howard's done really well, and Scott's done really well. We have just a fantastic cabinet. I'll tell you who's doing a great job is Linda McMahon. We're bringing education back to the states where it belongs. Education is going. God. We can't do any worse than we're doing right now. Let the states run it. You know, if you go back to some of our states that are run so well, so good, I would say 40 of them. And then you'll have trouble with 5, and you'll have bigger trouble with another 5. But you have 35 or 40 states that will run education as good as Norway or Denmark, Sweden. We have some, you know, the heads of the list are.
Oh, he brought up a list,
Norway,
not the list.
Sweden, a few others. I think if you go to Iowa and you go to Indiana and you go to, I can name a lot of states, I think it would be almost the equivalent or maybe better. But you can't run a school system in Iowa from Washington, D.C. Yeah.
It's pretty clear that Bitcoin's not enjoying what Trump is saying right now. So, as expected, after we get a rate cut, we dump. Unfortunately, that's the situation we're in right now. I hate when pessimism is correct, but that's the situation at hand. It is what it is. I love you guys. We're going to pay attention to the charts, and I'm going to be in the Discord tonight, watching out for trading quant signals and trading with my homie, probably late into the night. But thanks for joining me on this absolutely insane show. Jerome Powell, then Trump had to clout chase. A glazing sesh was had, and we dumped very, very hard from that 94.5 spot. We'll be back with it tomorrow night. Make sure to like and subscribe to the channel and share the stream out. Help me out with the growth of the channel. Thank you very much for joining me, and I'll see you on the next.
We just wanted to take a quick second to shout out our sponsor, Arculus. They are a cold storage hardware wallet, helps you secure all of your digital assets for the future. Just tap this thing to the back of your phone and boom, you're in. We wouldn't be able to do this without them, but also wouldn't be able to do this without you guys, the Disco fam. You've supported us a lot over the years. If you want to support the channel now, just use the code DC20. It gets you 20% off this card. It's the #1 way you can support this channel going forward. Thank you for your support. We'll see you at the top.